All right, traders, welcome to today's recap. It is Tuesday, the 13th, and this is your end of day recap from the Tribeca Trade Group. So, the story of the day I would say is oil. Big move down 8%. So, what are we looking at here? I want to go over some of the volume of the ETFs in the energy space. Very heavy volume. You could actually see this Norway ETF. So I'll go over the volume first since I have it up, and then we'll talk a little bit about the price action and how today basically traded, which was pretty ugly, I would say, throughout the day. So let me talk about the volume first. This is Norway. It looks like somebody probably was getting out of Norway. That is a energy sensitive country. 22%, 22 times, excuse me, not 22% of the volume, 22 times the normal volume. Normally trades, what, must be a couple 100,000 shares. Let's see if I have that. Normally trades 67,000 shares. Traded 1.5 million shares today. This is an ETF I talked about before. I'm not 100% sure if this was an ad or not. This is Fiesta. I was on Bloomberg a couple weeks ago talking about this ETF. Believe it or not, this is just another ETF that has consumer staples. The reason why I'm not sure if it was a buy is just the way that the trade went up. And also, you have Walmart reporting. What is that? Not tomorrow, but the next day, I believe. I believe on the 15th. So, Walmart is a big chunk of these ETFs. In the XLP, I know it's about 8%, but one big block of about 2.5 million shares went up. So, and then we shift down to the oil ETFs. You got Boyle in here, which is a leveraged energy name. But look at the volume. UNG, which traded 15 million shares. You had UCO, which is levered, basically double USO, traded 10 million shares today. That's 4 times normal volume. If I sort this by overall volume, you can see EEM traded a lot, basically all day today. EEM actually traded more volume than anything else. EEM finished up. Did that one give back the gains? I don't think it did. Let me see here. Finished up 1.1% after kind of a steep decline after the last couple days, but heavy volume, and that's 20% more than the normal volume. Again, one meaning average volume, and then 0.2 is 20%. So you just have to kind of multiply that out. But there's USO up there, 83 or 82 million shares, trading 3.3 times. Normally trades 25 million shares a day, traded 82 million shares. So some pretty heavy volume there, and I think a lot of this, anytime you see over one here, it's going to be energy. This is nat gas leveraged, 3.8 times. So some pretty crazy stuff. If we look at the weekly chart of oil, I mean, this is pretty interesting because each week you almost see a bigger candle. Maybe not, maybe an inside one here, but support is here on the weekly chart, 53.55, which is about another buck down. It's not way oversold on the weekly. If you go to the daily, which I've been talking about this, did not think this would capitulate so far to the downside. So if anybody's short oil, congratulations. But notice we took out 2 VPOCs here. There is another one, but it's all the way down at about 50 bucks. So I don't know if that's going to be strong enough to really pull this down after being, if you look at the RSI, we're now a 14 RSI. Really oversold. I mean, I know I talked about it yesterday being oversold about a 21, but sometimes these moves can really get drastically that way. So down to 55. So I mean, I think we're getting pretty near close to support, but that's what's been going on. XOP, every once in a while, I think I even tweeted out that there was a call buyer in XOP. But just remember, last week I think we talked about there was 150,000 contracts that went up in XOP puts, and it looks like they were pretty dead on with that one. That was the February 31 puts, and that was last Thursday, which seems like a lifetime ago. But that was, I think, here. What was no, maybe here. It was this day. It broke. It failed failed to get into value, and then you can see your reversal bar. That's when that traded. It's when it was around 36, now down at 34. So again, that was 150,000 of the Feb 31 puts that traded on back on Thursday. So it looks like they've made some nice money in that one, and same thing with XLE and OH. So that's probably the story of the day, that's been going on, but it's just overall pretty ugly. I tried to actually play some things. If you heard my midday video, it was kind of a different story around 11 o'clock. We started to see some buyers come into tech, and it just kind of quickly faded. So the VIX did end up down on the day, down 2%, with SPYs also down 20 basis points. But we are seeing, just anytime there's a little bit of strength, sellers coming in. I tried trading Facebook a little bit. You have to be very quick in this market. Take targets. I think I got a little bit greedy. It's kind of been how things. I don't mind sharing this at all, but it's been very difficult to take targets. Market makers have been very stingy in terms of that. I tried a little bit of Under Armour today too, and I was sometimes you just sit on the offer and you do not get filled. Very difficult. So Facebook, probably I was about 10 cents away from my second target. I managed to hit one target, and then I just kind of sat in this and said, let's see if I can get a nice green bar. And this is basically how it's been going lately. You have your bearish engulfing candle. And one of the things that I said earlier is we're going to have to see, for really more than an oversold bounce, which is what we got this morning, I believe, and maybe moving on some possible trade headlines. Again, I say that and I'm literally shaking my head. But we need to see obviously more progress, and we need to see things get above basically yesterday's open, which we did not see for the most part. Another name that had some strength. It's been 3 days now since it had earnings and a kind of a weak report, was Square. Square had some strength, but again, note that you're seeing this, and I bring up Square in particular because I think this is the case in a lot of things, right? With an oversold bounce, notice it was just basically an inside day, which doesn't mean you can't draw any conclusions from that. Still tucked below the short-term moving averages. So, if you're going to trade in this market, because I do think, I called it earlier a day trader's paradise. But you got to really be quick if you're playing things from both sides. SMH is a good example of that. Notice what this thing did today after moving down 4.4%, was up at 1.3%. But again, you cannot just sit and watch the paint dry. You've got to be taking targets and then wait for those reversals. I mean, what we've seen previously on a normal day where we start with strength is you see this little bit of digestion here, kind of put in a bull flag and then end up going higher. What we're seeing these days is we pause here at the moving averages, give it back, try to retake it again, fail, give it back, and do this type of thing. So that's what's going on here. If we look at I haven't really been going over too much of the indices lately, I would say in every market video, but might as well touch upon them now just to see if there's anything that really changes. I mean, there's not. I mean, let me bring up Qs rather than NASDAQ futures, but just another failed bounce, which really means that sellers are in control right now. And I was joking around last night. I sent out, I was looking at charts, and there's one or two names that I thought looked interesting. That's it. I mean, and I'm going through a lot of charts and a lot of names. I thought Under Armour looked good. I tried trading Under Armour today. I could not get a target. The market maker would not move in the options. So you've got that battle going on too. And why would they? Why would they give you a fill when you know that the market is just, if it's has been more likely just to do that bounce and then continue lower. But that was one of the few charts. Notice the Qs, by the way, are at the bottom of value. We'll see if that holds for tomorrow. It's really tough to say whether or not, I mean, that these things are going to hold. The Apple still has that 190 VPOC out there. So it has, sorry, this must be something with my computer. But right here is where there is a VPOC. That's where I said that I would be a larger buyer tomorrow in Apple. So that's pretty close. And so I heard somebody saying that they were coming on and talking about Apple being the most important stock out there. That's not really a big leap of faith, I would say. It is the biggest company. So, yes, it's going to be. I don't want to, whether it's the most important company, it's the largest company out there. That and what Amazon are the two largest companies. So, yeah, I would think if you're going to pay attention to a name, well, that's going to be it. IWM is again just going through these charts and how they finished. Of course, the closing print is the most important. I really do not see a lot. We did get. I talked about this in yesterday's video, how we were pretty oversold. I think it was IWM, Diamonds, and the Qs. I'm going from memory here. All had an RSI on the 1 hour of about 20 or less than 20. So we got that bounce. Unfortunately, again, the 1 hour is really revealing in terms of the trend. But we got that oversold bounce. I think IWM was up about 1% today. Ran right smack into the bottom of value. So again, really good technicals on the 1 hour to follow along with. But and that was it. So we burned off the oversold levels and continued to go lower. And we actually did finish lower than where we closed out yesterday in IWM. So again, not much to really get excited about. Two trades that I had on, just to kind of go over what I did today. The other CL, Colgate Palmolive. This actually doesn't look bad, by the way, on the 1 hour. I got out of the last piece of my Colgate. This was a big winner on Friday, but kind of gave back a little bit. And then I got out of CVS, which we actually saw a little bit more CVS go up today, but it was up about 1% today. And again, I was just fighting with the market maker all day long today. But I don't know if this has enough power to continue its breakout. Hey, I made some money on this one and just moving on. And I would rather be that way right now in some trades than to try to get a real nice winner. Another chart that I'm looking at right now, and I'll just kind of leave it there because I just don't have a lot to really add that is really convincing or, giving me conviction to kind of take a stand either way right now, is XLU, the utilities ETF. It's trying to break out here. So, I know this stuff is boring or can be boring to trade. A lot of people are not really interested in utilities, but I will tell you the positives here is that the implied vol, if you're trading options, this is a much cheaper trade, and I've talked about that in previous videos. We talked about our Walmart trade that we made a lot of money in, and the beauty of some of these things is the implied volatility is so much lower because they normally don't move that much. But if these things, if I've talked about how these defensive names, if they start going in one direction, you can actually make a decent amount of money on them because the options market makers are not implying a big move for them. Just, I guess, a final note, so I've been and I talked about this in the midday session, but, I've been very bullish on been talking about growth versus value. I'm not sure if that's has run its course at this point. If we look at the relationship between the two, which I could try to bring up here. So what I want to look at is IWD versus IWF. There we go. This should be this. And you could see it is moving in the right direction, but it's pretty slow at this point. And, when I hear more and more people talk about defensives and value versus growth, it gets me a little bit sketchy because I hear a lot of people talking about that now. So I'm worried that the trade is starting to come to an end, even though we do have a break of the 200-day moving average, which looks good. Another area that I'm looking at We'll continue to watch credit spreads. You can look at TLT versus versus HYG. You can look at this in terms of whether they're getting narrow. And it looks like, from where we were last week, this is tightening and it's been winding out. So we're almost back to where we were towards the end of August. Excuse me, the end of October in terms of credit spreads. So they did tighten, which is bullish, and they are starting to widen out again. So I would watch this level. Basically, again, this is with TLT in the numerator, but that's what that looks like. So that's it for now. I think you just kind of have to take it day by day, and again, just be careful with swing trades right now. I'm really trying not to put on too many swing trades, and I'm really taking them off if I start to see the market, go the other way. So that's it. Of course, this video is for information purposes only. That's it. Have a great night, everybody. See you tomorrow.